Let's plug this in. Nice, now we have the power. Don't repeat this at home. The best dividend stocks in Canada in utilities sector. Let's go. Hello everyone, my name is Alex, welcome to my channel. I hope you are staying safe, I hope you are staying warm and you have power at home. Why? Because today we're going to be talking about the best dividend stocks in Canada in utilities sector. So I'm going to continue in my series of the best dividend stocks in Canada per sector. And you can find out all other sectors I talked about in my playlist. And today we're going to be talking about utilities sector, which is one of the most important ones and one of the staples in almost every single investment portfolio. And we'll find out why. Let's go. Utility stocks provide stability to your portfolio. They operate on a highly regulated environment, the one that provides consistent revenues and lead to less surprises. You can consider them sort of like bonds that give you a lot of security and stability to your portfolio, and you also can benefit from dividends. They pay a lot of dividends. There are only benefits of having utility stocks in your portfolio. Utilities have long been seen as an investment class that can provide relatively high and safe dividend distributions for investors. They often provide excellent dividends. Most of these companies are established and have solid roots implanted in the industry. As such, they are able to reward shareholders in the form of dividends, which is great. That's what we want from our dividend portfolios. And on the other hand, if you're looking for stocks to build the foundation of your portfolio, these are the ones you want to take a look for sure. And especially right now with interest hitting record lows due to COVID-19, utility companies right now are actually in the excellent position to outperform on the long run. And to be honest, utility stocks are the ones that have to be in every single Canadian portfolio. And I know maybe utility stocks are considered boring stocks, which is probably true, but they offer rewards that none other sectors provide. Regular dividends and slowly moving stocks upwards are only some of the benefits that we're looking at in these kind of markets. And they provide unmatchable portfolio stability with great, consistent returns. Utilities are never go out of necessity. This is what we do every single day. And even during the stock market crashes and all the different pandemics happening here and there, we still need power in order to exist. Which is why these are the stocks that are recession proof and they perform pretty good during the very bad market conditions. In other words, if a utility company can sustain providing these contractual obligations and service to its users, they'll be getting a ton of recurring revenue back, which can sustain any sort of dividends and can perform really well on the long-term market fluctuations. This makes this business an incredibly safe, stable, and reliable choice of almost every single investment portfolio. So with that being said, let's jump right now into the best high dividend stocks in utility sector that you need to look at in 2021 and actually beyond, because we're in the long term here. Keep in mind that the list we're going to be looking at is in no particular order and each provide a unique opportunity first to its shareholders like you and I, and also second to its users, to the customers of their utility services. And the first one we're going to be looking at today is probably known to everyone. It's just the stock that everyone probably already has in their portfolio, which is Canadian Utilities. The ticker symbol is CU.TO. And I talked about Canadian Utilities before in multiple of my previous videos, so you probably added that already to your portfolio. I certainly have it in mind. But I think my list would not be complete without Canadian Utilities in it. So Canadian Utilities has increased its dividends for 49 consecutive years and could continue to grow it further in the coming years on the back of the high quality earning base. The company derives the majority of its earnings from the regulated assets that generate predictable and growing cash flows, supporting higher dividend payouts, which is what we want, which is what we are looking for in these dividend companies. Let's sum them up. The market cap is at $9.2 billion. The dividend yield is at 5.2% as of today. They've been increasing dividends for 49 years. And next year, they're actually going to become the first dividend king in Canada. Wow, that's huge. So they'll sustain their dividends for sure for the next little while. They don't have any reasons to cut their dividends, to stop increasing their dividends anytime soon. The payout ratio right now is at 131%, which is not great, but they're slowly recovering from the market crash of last year. The 10-year share price growth is at 25%. And if you look 20 years back, the share price grew actually at 154%, which is great. So we have this consistent share price growth over the long run, so we're good here. Our beta parameter, which is the share price volatility number, is at 0.54, which is pretty safe, and we're not expecting any fluctuation from this stock. So overall, it's a great stock to have in your portfolio, and I think every single dividend investor is supposed to have it. Yeah. But now let's move on to more exciting stocks in utility sector. Let's see. So let's take a look at Capital Power Corp. The ticker symbol is CPX.TO. It's another great utility company that I have in my portfolio as well, and you might consider to add to yours too. So Capital Power is an Edmonton-based power generation company that relies on multiple energy sources to produce electricity. Capital Power owns and operates power generation facilities in North America. Since power generating assets are generally low risk, you can expect stable cash flows regardless of economic cycles. Right now, actually only 27% of their energy comes from renewable sources. 43% of them comes from natural gas, and the rest comes from the power plants that use both natural gas and coal. But the good thing here is that company actually planning to go off the coal by 2023, which is great. Let's make this planet a better place. The company has been slowly growing its revenue and performed really well in 2020 as well. Because of the business nature, the management has been growing its dividends by 7% annually since 2014, which is great. It's been 6 years of consistent dividend increases. They plan to grow its yield by 5% next year as well. You only need to look at 3 major competitive advantages of Capital Power Corp. It's first, the low-risk business model, power-producing assets that generate predictable cash flows, and 3, long-term agreements. The dividend payouts for this company should last for years. Let's quickly take a look at our metrics now. The market cap for this company is at $3.9 billion, and I think if they're starting to invest more into renewable energy, and the renewable energy on its own is going to start becoming more and more popular, they have a huge potential ahead of them. The current dividend yield is at 5.6%, which is great. That what we want. We're gonna get a lot of money back. They've been increasing their dividends for the last 6 years, so they're a part of Dividend Aristocrat list, which is what we want. I actually talked about all the best companies that list before, so go check it out. And I think now they have an obligation to keep increasing their dividends forever. I mean, until they cannot do that, but looking at them, they should be able to sustain those for a little while for sure. The dividend payout ratio is not at the great mark right now. It's at 257%, but they have been on the path to improve it. The 10-year share price growth is at 44%. They've been hit pretty hard in the last year market crash, but also they recovered pretty fast. They're actually right now, again, it's all-time highs numbers. The beta parameter is at 0.73, so we're not expecting a lot of volatility from this stock. Alright, we have a couple more to go. Let's move on to the next one, which is super exciting. And it is Hydro One. The ticker is H.TO. Hydro One is one of the largest transmission and distribution providers in Ontario, Canada. The utility has 1.4 million customers, this is crazy, servicing 1/4 of all customers in the province. Hydro One's dominant position in the province only adds to its appeal as superb defensive holding. Hydro's one dominant position in Ontario only adds support for its being a great addition to your portfolio. Hydro One is actually one of the safest stocks that I know of. Its business model is designed to withstand any economic downturns. And if you want to sleep easy and do not wake up at night in order to sell your stonks, well, you cannot because the markets are closed at night. Anyways, Hydro One is one of the stocks that will allow you to sleep well. Nice. And why is that? Because when the stock market fluctuates, it goes up and down, or down, down, down. The demand for the power doesn't change much. And that provides stable volume of cash for Hydro One. And because the pricing is dictated by regulators, most of the time years in advance, we're safe there too. The company can achieve great cash flows no matter what the economic conditions are, which is great that we want from our dividend stocks, right? And from having a really safe dividend portfolio. This stock is definitely not going to make you a millionaire overnight, but it's going to make your portfolio safer and you can withstand it through the bear markets if that time is going to come. And it probably will. And sort of came already, right? Where we are, bear or bull? Who knows? Tell me in the comments. Let's take a look at our metrics for Hydro One now. The market cap is around $17 billion. The current dividend yield is at 3.5%. And they've been increasing their dividends for the last 5 years, so they've been added to the Dividends Aristocrat list, which is great. And company was added to the Toronto Stock Exchange just 5 years ago, and they're already crushing it with dividend payments. That's what we want from companies like that. The payout ratio is at super stable numbers right now, is at 34%, so they have enormous amount of money saved up in order to reinvest back in their business. And we also can expect a sustainable dividend payments on the long run. The 5-year share price growth is at 30%. 5-year why? Yeah, because the company just was added to the Toronto Stock Exchange 5 years ago. Our beta branch is 0.16, so it's a pretty safe investment to have in your portfolio in terms of share price volatility. The next one we have is Emera. The ticker symbol is EMA.TO. Emera is the Nova Scotia-based electrical utility company that provides electricity to about 2.5 million consumers in Canada, the US, and the Caribbean. A total of 6 countries, actually. It has about $31 billion in a wide variety of assets, under different brands and companies also. Its asset portfolio is composed of power generation assets, distribution infrastructure, and natural gas distribution facilities. It has over 900,000 natural gas customers in Florida and New Mexico alone. As a utility company of 2 different utility businesses and also geographically diversified portfolio of customers, Emera seems actually a pretty safe investment on the long run. And it's not only a long-term stability, it also has a great dividend yield of 4.5% and been increasing their dividends for the last 14 years. And the board of Emera intends to boost the dividend by 4 to 5% next year and in 2022. Also, I think Emera actually can become one of those companies that can be acquired in the next little while. So right now, before any sort of rumors even started going around, right now it can be a great investment also in terms of share price appreciation in the next year or two. And now let's take a look at our metrics for Emera. The market cap is at $14 billion. The yield is 4.5%, as I just said. And also, as I just said, right, that they've been increasing their dividends for the last 14 years. So they're part of the Dividend Aristocrat list as well. They're not going to drop those increases or dividend payments anytime soon. The payout ratio is a very sustainable number, is at 65%. The 10-year share price appreciation is at 78%. And for the last 3 years, for example, it has a total share price return of 57%, which is great. And I think that's one of the reasons why this is a great stock to be added to your portfolio right now. The beta parameter is 0.2, so it's a pretty safe investment from the stock volatility perspective. There are 2 more stocks that I thought to add to my list today, which is Algonquin Power and Fortis. But at that time, my video would become a real TV show, right? For 45 minutes, watching me talking about stocks. Yeah, this is great. Probably should do it. I also covered them in one of my previous videos here. You can check it out. Other than that, that's it for today. Thank you for joining me here. Like this video, subscribe to my channel so I can reach more people like you and inspire them to start investing. Also, hit the bell, I forgot where it is, so you can be notified for more videos like this. And stay tuned for more videos of top dividend stocks in Canada by sector. Thank you. I'll see you in my next video. Cheers, bye.